Joining me now is Jay Woods, Chief Market Strategist at Freedom Capital Markets. Jay, welcome to the show.
Good to be here.
All right, so what are you going to be tracking most closely across markets over the final days of 2025?
It's all about the Santa Claus rally, so we'll be watching NORAD to see if Santa actually comes to the corner of Wall and Broad. And when I say Santa Claus rally, it's an old adage, meaning the last 5 trading days of the calendar year and the first 2 of the new calendar year tend to be very bullish. On average, we're up 79%, with an average gain in the S&P 500 of 1.3% going back to 1950. So if Santa can come, guess what? The S&P 500 is going to make new highs. 6901 is the number we're watching in the index. And if that index does eclipse 6901, then we're going to be very happy here as we sing Nelly on December 31st, New Year's Eve, getting my days all mixed up. But we have 6.5 trading days left in the year, so we're just focused on getting through the year. Not a lot of economic data, no earnings. So we'll just focus and see if that rally can continue, and we finish at the end of the year with new highs.
And speaking of the economic data, since you last joined us, we have received fresh inflation data showing year-over-year inflation growth slowed to 2.7% in November. What does that tell you about the state of the economy?
Well, let's talk about the number itself. It was supposed to be 3.0 to 3.1%. They left out some key data points when looking at that. The shutdown kind of left some holes in that CPI data. They had gas numbers, which had gone down, but they were shelter and food numbers were not in the CPI data, which probably went up and gave us closer to that 3% target. And the reason it was so important is the market didn't react the way we wanted to see it. You know, if you're down from 3.0 to 2.7, you would expect this market to be at new highs right now. But when you look at the odds of a rate cut in January, they went down because that CPI data was incomplete. We need one more data point, which will have the complete data before the January 28th, 29th meeting next year. So the CPI, while it was positive that inflation went down, it went down with a big asterisk next to it. Unemployment, however, was the other data point. That ticked up unexpectedly from 4.5 to 4.6. So not good that we're seeing unemployment rise, but if you're looking for a rate cut, that's what we will focus on and opens the door to a January rate cut. But we'll see. Powell didn't really telegraph the fact that we were going to cut at the next meeting. We'll be data dependent, and the data was a little wonky on the CPI side, okay on the unemployment side for a rate cut, but the Fed speak so far since that data point, not really looking like we're going to get that rate cut in January, but a lot of time between now and then, so we'll see.
How heavily does the Fed weigh these economic data points when considering a potential rate cut?
Yeah, well, it's the dual mandate. So they want to see inflation numbers come down, which we saw in the CPI, and then you want to see unemployment come down as well. And as unemployment ticks up, you want to cut rates to try to get more people the opportunity to bring more people into the workforce. But when you cut rates, then you're worried that prices may rise as a result of that. So it's a very tough thing that the Fed has to navigate from meeting to meeting. And right now, they've been navigating it well. If we can see inflation come down and prove that tariff inflation was just that transitory, then the path to rate cuts is there for whoever the next Fed chairman is come May. But we still have 3 Fed meetings left with Jerome Powell. I think what we're going to focus on, besides maybe one more rate cut before he sails off into the sunset, is stapling his legacy and seeing how the Fed is, set up on a voting member basis. A lot of Fed officials were just reinstated for 5-year terms. And those Fed officials that are voting are very mixed. So the independence of the Fed will be the theme going into the end of Jerome Powell's tenure. And rate cuts, we may get one before he sails off in May, but I don't expect anything from this data that we got last week to really impact the Fed's policy going forward until we get more data.
All right, and the BEA is going to be releasing its initial Q3 real GDP report tomorrow. How much weight are investors putting into this?
Yeah, we're not really putting too much weight into it. We got that holiday malaise going right now. So if the number shocks us, then we're going to have to dig deep into the numbers because, again, it was impacted by the shutdown. So we'll see. What we're focused on right now is ending the year strong. 3rd straight year of double-digit returns in the S&P 500. We've done that 2 other times in this century. Between 2019 2021, we had 3 straight years of double-digit gains. 2012 to 2014, 3 straight years, double-digit gains. We haven't had 4 since the 90s, the dot-com, 95 to 99, that was 6 years. 95, 96, 97, 98, 99, 5 years. Sorry about that. And we'll see if we can end the year strong, kick off 2026 strong, and maybe go for a fourth straight year of double-digit gains. But as far as that GDP number goes, it could make some headlines because there's really nothing else to talk about. But the traders that I talked to, myself included, we're not really focused on it at all.
And after the Santa Claus rally period ends in early January, what do you think is going to dominate market sentiment into the new year?
Okay, we've got a few things. In the new year, we're going to watch earnings growth. That should continue. We've had a nice trajectory there. We're going to talk about the next Fed chair. We haven't had one named yet. We're going to watch the Supreme Court. Supreme Court decision on tariffs did not come out yet. I assume it's not coming out during the holiday 2 weeks. So that could be coming out in January. If they deem these tariffs illegal, that could throw a monkey wrench into a rally as the president and the administration try to find ways around it to keep tariffs going. And then you deal with lawsuits. Costco's already filed one preemptively saying if the tariffs are illegal, we want our money back. Well, it could cause an uproar, so you have to see how different companies handle it. I would watch Nike. If the tariffs are deemed illegal, that stock should take off because it's been killed with tariff concerns. And then it's a mid-year election cycle. So this isn't something we're going to talk about in January, but as you go through the year, midterm election years tend to be very volatile, have a history of actually being flat to down, so it won't be a very easy task to get double-digit returns in this market. So let's follow earnings growth, tariff policy, new Fed chairman, and then election second half of the year. And I'm sure there are going to be tons of curveballs that we'll talk about from time to time as I sit up here, but right now, that's the focus.
All right, thank you, Jay Woods, Chief Market Strategist at Freedom Capital Markets.
You got it.
Thanks for joining us.
Happy New Year.
Happy holidays.